Gone are the days of unwavering trust in banks as impregnable havens. Our once stalwart financial institutions now teeter on uncertainty's edge. As Robert Kiyosaki's words reverberate, they sound like a clarion call. A profound comprehension of financial intricacies is our shield against the looming storm in a world where banks' actions become potential threats. Point 1. The fragility of financial systems. Modern money troubles appear in big banks like Silvergate, Silicon Valley Bank, Signature Bank, and Credit Suisse. They're falling like dominoes, way faster than the 2008 financial mess. The quick failures point to issues with how money works, the government's power to print it, a lot with interest rates, and banks lending more money than they have. The story starts with these banks falling apart one after another, and it happened real quick. This shines a light on how shaky the banking system is. You see, our money isn't backed by anything valuable, just the government's word. Recent changes like the Bank Term Funding Program and loosening up on FDIC insurance rules have worried people about how much the government meddles in the money. These changes take away protections to stop another big mess from happening. All this mess doesn't just impact the money people. It affects regular people too. More money being printed can lead to higher prices for things, which hits our wallets. Back in the day, the great financial crisis of 2008 happened because of risky mortgage stuff. But now it's a different kind of mess. Smaller banks got into trouble by lending money for a long time and needing more when things got rough. This made people panic and pull their money out, weakening the banks. This point of vulnerability, where economic downturns expose the frailties within the banking sector, underscores the importance of Robert Kiyosaki's warning. His call for a deep understanding of financial dynamics becomes a lifeline in these troubled waters. It's a rallying cry to arm oneself with knowledge, to decipher the inner workings of economic crises, and to prepare for the unforeseen repercussions that could potentially lead to the drastic measures hinted at by the title, Banks Will Seize All Your Money in This Crisis. Point 2. Robert Kiyosaki's Insights. In the middle of all this money talk, Robert Kiyosaki's voice is like a bright star. He's not saying the same old stuff. He's giving us a whole new way to look at money. And guess who he's pointing the finger at? The big shot is the U.S. Central Bank, also known as the Federal Reserve, Fed. He's calling them both the problem and the way out. But wait. He's waving a flag about the bond market going bonkers, and that's no good news for our retirement savings and pension plans. Even though some fancy people are saying our money's safe, he's not buying it. He's sounding the alarm about a big crash and chaos just starting. But here's the kicker. He wants us to kick open the door of our usual money thinking. He's daring us to step off the usual path and take a peek at new possibilities. His ideas are like a treasure map, leading us to a land of financial freedom, learning, and thinking smart. Point 3. Wealth disparities and crisis impact. Sure thing, wealth disparities and their impact on crises are a big deal. We're facing a severe banking problem, the worst since the 2007-08 financial crisis. Here's the deal. Banks are losing tons of money on government bonds primarily because of aggressive interest rate hikes. Imagine banks owning these bonds that are supposed to be super safe investments, causing extensive losses. These losses are making some banks shaky and vulnerable. So why does this matter for regular folks? Well, it's all connected to wealth. We've got a big gap between the rich and the rest of us. But here's the twist. While overall household wealth is decreasing, the poorest 20% of households see their wealth increase slightly. From 2021 to 22, the wealthiest people lost much of their wealth, but the poorest people gained. This is surprising because the top 1% usually hold much wealth. Meanwhile, the people at the bottom have only a tiny slice. Even though they're getting a slightly bigger slice now, it's still a tiny piece compared to the vast chunk the wealthiest people have. Real estate is a big deal when it comes to wealth. It's not just about owning a home, it's a significant asset influencing wealth. Think about it. If house prices fall, people might feel less wealthy and spend less money. This can create a chain reaction that affects the economy. And here's the thing about jobs. If banks are struggling, they might not want to lend money as easily. That means people and businesses need help getting loans, which could lead to fewer jobs. If banks are lending, companies can expand and hire more people. Point 4. Banks' role in financial crises. Hold on tight. There's more to this tale. Governments play their part too. They borrow money from banks to build stuff and offer services. But if the banks are in a jam, they might not want to lend money to governments as much. They can make it pricey for governments to borrow cash. And when they have to fork out more to borrow, they might even tighten their belts, affecting things like healthcare and stuff we all need. Here's the twist. Central banks can rescue the situation by buying government bonds. But watch out for the boogeyman called inflation. More money can make prices zoom upwards, and if prices get way too wild, central banks might need to jack up interest rates to keep things under control. The catch? High interest rates make borrowing challenging. even for those wanting a home or a fancy ride. Now it's time for some real brain busters. Governments and central banks have a tricky job. They must safeguard banks and prevent the economy from going down the drain. It might mean they slash interest rates, but that could also mean dealing with pesky inflation for a while. While they're at it, the gap between the rich and the rest still has a big say in how the crisis hits people's lives. Point 5. Strategies in protection and preparedness. Hold up, folks. Big banks are tumbling like dominoes and everyone's scratching their heads. Some say it's terrible management. Others point fingers to those in charge. But who's got a different take? Yep, you guessed it. Robert Kiyosaki, the money guru. In a talk with Vox Business, he pointed at the U.S. central bank as the root of the problem. He's saying they're both the cause and the fix for this mess. Hold on tight because the bond market is in trouble, and that's bad news for things like retirement savings and pensions. He's still determining, even though they say our money in the broken banks is safe, he's sounding the alarm that this crisis might just be getting started. So what's his plan to stay afloat in this stormy sea? Well, he's got 2 tricks up his sleeve. Get friendly with precious metals. He passionately advocates for gold and silver. He asserts they are hidden tools to combat increasing prices and global uncertainties. Unlike conventional currency, they cannot be created at will. Despite the government's efforts to raise rates, Kiyosaki remains skeptical about the possibility of prices calming down. Listen to this. The Fed and the FDIC are signaling hyperinflation, which makes gold and silver even better. And here's the kicker. He's waving a dollar bill, saying they're going to print more and more of this fake money. But wait, there's more. Silver's his favorite. He says it's the best because it's used in missiles. This is the best investment of all, silver, because every Tomahawk missile has 30 pounds of silver in it. Every time they push that missile button, 30 pounds of silver disappears. Dive into the Bitcoin pool he's calling Bitcoin the new gold. While he's still a fan of the old school gold, he's eyeing the world of cryptocurrencies. In a tweet, he's giving a little hint. Buy more GSBC, which means gold, silver, and Bitcoin. You've probably heard that Bitcoin's a roller coaster ride, but it has some fight. It took a big tumble, losing 60% of its value in 2022, but then bounced back with a whopping 72% jump in 2023. And here's the scoop. Getting some Bitcoin is easier than ever. But take this tip. Watch out for those sneaky fees from exchanges. Some can be as high as 4%. Find a place that won't break the bank with fees. So there you have it. Kiyosaki's got your back as you navigate these money twists and turns. With his pals, precious metals, and Bitcoin, you can make your cash work harder for you. Point 6. Active financial planning. Let's talk money and smarts with Robert Kiyosaki. He's got some tricks up his sleeve to help you sail through the money maze. You'll find him different from your usual stock market fan, but he's got a few favorites there. He needs to give traditional banks a complete thumbs up. He sees them struggling as tech and digital coins change things up. Check this out. Regular banks are solid and have that FDIC safety net. But those recent bank hiccups show that depending on them might not be genius. Now we're moving into infinite banking. Think of it as having your bank with your rules. Here's how it works, step by step. Fractional reserve headache and bank oops. Some banks hit the rocks recently because of bad deals, lousy bossing, and the fractional reserve. They only keep a piece of what you put in and lend the rest. But when too many folks want their money together, things shake up. People think it's all ready to grab, but it's not. Peek into infinite banking. Imagine you're selling lemonade and folks pay you. What if you could also lend them money to buy your lemonade? Banks do that and they make extra bucks. Infinite banking is like becoming your bank boss. You use special insurance to create your stash of cash. You can borrow it whenever you want. Think of it like a secret wallet you can use anytime. Extra safety for your money. FDIC-covered banks are excellent, but infinite banking goes further. It uses insurance plans to keep your cash safe from bank glitches. Insurance companies have to stash more cash to be safe. Imagine you've got $100,000. You use that to get an insurance plan and your cash spot is born. You can borrow from it any time. While you use it, your project earns you some extra. Create your mini bank. Here's the plan. Get a specific insurance that grows your money over time. You put money in, it grows, and when you need it, it's there. It's like having a sneaky savings spot, not tied to regular banks. Outro and call to action. Kiyosaki's warning is a wake-up call saying old ways won't cut it. Understanding money moves and building a solid base is a must. The past's lessons and thinking ahead push us to steer our money ship. Let these lessons guide us through money's maze as we wrap up. Feel the power of knowing money, being ready, and planning smart. And now it's over to you. Hit that like button if these insights hit home. If you're hungry for more financial wisdom, subscribe to stay in the loop. Don't miss a beat. Tap the notification bell to get the latest. Share this with your friends and family because smart money decisions are best shared. Here's a question for you. What money ideas click with you? Your thoughts are like a map guiding us forward. Drop a comment below, and let's keep the conversation going.